Hi, you have tuned into our weekly podcast called Equity Masters Stock Market Wrap Up. This is Rini talking to you from Mumbai. In today's episode, I will talk about what moved the markets this week and everything that matters to you and your wealth creation. Let's begin with a look at broader cues. Stock markets in India rose for the 6 consecutive sessions this week. Indian markets have been underperforming since quite some time. So, is this a trend reversal and is the bottom forming in the market? Well, Indian stock markets are up around 8% since the government announced a cut in corporate tax rate but saw a weak period in between due to continued concern about health of the Indian banking and financial system. Foreign portfolio investors had been in sell mode for majority of the sessions after the corporate tax cut was announced as they remained more concerned about the weak economic growth numbers. Now from the global space, the news that was in focus was Brexit deal. On Thursday, Britain and European Union said that they have struck an online Brexit deal after days of intense seesaw negotiations, though it must still be formally approved by the bloc and ratified by the European and UK parliaments. The breakthrough came just hours after British Prime Minister's Northern Irish government allies threw a spanner in the works by saying they couldn't support the draft agreement because of provisions for the Irish border. Shares of the Indian companies that have business exposure to the UK and Europe, that is Tata Motors, Eicher Motors, Bajaj Auto, Tata Steel, Bharat Forge, Tata Elxsi and so on, boomed after the announcement. Meanwhile, news on the US-China trade front has been less encouraging. As per the Bloomberg reports, China will struggle to buy $50 billion of US farm goods annually unless it removes retaliatory tariffs on American products, which would require reciprocal action by US President Donald Trump. Let's see how this pans out. Now moving on, foreign portfolio investors withdrew over 62 billion rupees in just the first 2 weeks of October. FPIs pulling out a significant amount of money in October raises alarm as this has been a truncated trading month with several market holidays already. Out of the over 62 billion rupees withdrawal, foreign investors have pulled out over 45 billion rupees from equities and 10 billion rupees from the debt market. The fear of a global recession as well as potential trade war is hurting market sentiment. They also feel the consistent cuts in GDP forecasts for India are spooking the market. Continuing its losing streak for the second straight month, India's merchandise exports dropped by 6.6% in September 2019 as compared to the same period of last year. The fall came on the back of significant dip in shipments from key sectors like petroleum, engineering, leather, chemicals, and gems and jewelry. Trade deficit gap between imports and exports narrowed to a 7-month low of $11 billion in September from $15 billion a year ago. On the other hand, imports during September 2019 decreased by 13.9%. Next, on Tuesday, International Monetary Fund cut its estimate for India's growth for this year to 6.1% from 7% projected in July, calling on the country to use monetary policy and broad-based structural reforms to address cyclical weakness and strengthen confidence. Moving on, India's retail inflation sharply accelerated in September to a 14-month high at 3.99%, almost touching the central bank's medium-term target of 4%, as food inflation nearly doubled to 5.1%. The high retail inflation could limit the Reserve Bank of India's ability to further cut policy rates. Data released by the industry department on Monday, however, showed that wholesale price inflation decelerated to a 3-year low at 0.3% in September, compared with 1.1% a month ago, as prices of manufactured items entered the deflationary territory signaling the lack of pricing power of producers in the current economic downturn. The WPI inflation rate declined in September despite onion prices rising 122% from a year ago. The government has banned exports of onions and put stock limits on traders to cool prices. As per the reports, the rise in retail inflation may impact the rate cut cycle of RBI. The decline in core inflation provides some comfort, but the unexpectedly sharp jump in September CPI inflation has pushed up the likelihood of a pause in the next monetary policy review unless the headline retail inflation recedes sharply in this month. From IPO space, IRCTC made a strong debut on Monday. The shares of the company got listed at 644 rupees on BSE, a 101% premium over issue price of 320 rupees. The 6.5 billion initial public offering of IRCTC was subscribed almost 112 times, making it the most successful share sale in over 20 months. Well-researched analyst Ankit Shah has shared the detailed note of IPO in one of the Equity Master Insider issues. You can just log on to Equity Master Insider and find out the details yourself. In another macro news, the World Bank has taken a grim view of India's economic affairs. It has slashed India's GDP projection to 6%, a downgrade of 1.5% from its previous forecast. It cited both cyclical and structural factors. The key culprits stand out to be the liquidity crisis and the debt-saddled corporate balance sheets. Now, before you take these gloom doom sayings very seriously, you must know our small cap research analyst Richa Agarwal's views on this. Well, I would like to quote it for you. She says, and I quote, "Those who were wise enough to bet on quality small caps at the time of crashes, when fear ruled small caps, have compounded their money at a multiple of that rate. 2019 is one such phase of fear. To be sure, some of the economic concerns are real, and the companies with bad managements and balance sheets will only destroy more wealth. But if you could choose your small cap bets wisely, rebound riches could be yours." Unquote. You can follow Richa's recommendations by logging into hiddentreasure.in. We gotta wrap it here. Wish you listeners a happy weekend. Do come back next week for our market analysis and updates. Remember, it's equitymaster.com. Before I sign off, I would like to know whether you like our podcasts. We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Have a profitable week ahead. Thank you.